And welcome to another pre-market rundown for Friday. Well, it's the first time for Friday, April 22nd, 2022. I'm Andrew Horowitz. I am the co-founder of TriggerCharts, and we're going to take you through some really interesting things that are going on in the markets like we do each and every week. Of course, this week we are here. Last week we weren't. It was Good Friday. The markets are closed, and, we thought we would take a break from this as well. Thank you so much for joining us again. All of these sessions are recorded, can be found on TriggerCharts.com. Soon after, by the mid part of today, they'll be up and running, so you could check that out if you want to replay that or just understand a little bit more about something that we talked about that maybe you didn't catch the first time around. So something to think about there. Before we go on, let's get it out of the way. Investing involves substantial risks. No question about that, right? We know what's going on lately. Past performance is not a guarantee of future results, and a loss of original capital could occur. Use your best judgment with investing, and please, 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 consider everything that we talk about today for personal educational uses only. That's it, okay? So with that, let's talk about what's happening here. It has been sloppy at best, right? Well, hold it. Stop the train. I need to mention this every single time right now until we get this resolved. Do not, if you are currently subscribing to any of the indicators that we have, do not drop them right now, because TradeStation, the trading app store, is going through a massive update. You will not be able to resubscribe right now. And I'm not exactly sure how long this is going to go on for, because I know it's a pretty significant update that they're doing. So make sure that you don't, for whatever reason, even accidentally say, oh, you know what, I'll hold off for a month and I'll get it back, or 2 weeks, I'll get it back next month. You will not be able to subscribe. Let's just leave it at that right now. We're working with them. It's not just us, it's everybody. It's the entire trading app store, the whole ecosystem that they have there. So make sure that you are holding on to your subscriptions. All right, we got that. We understand that. I'm going to mention it every time until we get this resolved. And yes, we have been working with them diligently to get this resolved. What are the themes? What's going on? The risk factors in the markets right now. Right now, we're seeing, again, red across the board from Bitcoin all the way to the SPOOs. YM's down 115. That's the futures on the Dow Jones Industrial Average. The ES, or the SPOOs we call them. The S&P 500 down 10 after a bloodbath yesterday. The Qs, which have been getting eviscerated, and then all of a sudden up like crazy, right? No memory from day to day. And gold down a couple of bucks today, down $11, still holding above the 1900 rate. Everything that we're talking about is dedicated to the chart to the right. This is what is going on. If you didn't know what this was, if it didn't have any name on it, if it didn't show you what it was, you would say, wow, that's overextended, right? I mean, it makes sense. That's overextended. That's a parabolic move if I ever saw one. What's going on with that? And what we're seeing right now is the 10-year Treasury note interest rate that went from a period when it was, let's just call it, let's go back to a reasonable level right here, this level right here, this 1.8 level that we started the year at pretty much. It leveled off, came up, came back down, leveled off again, and then no stopping it now, moving straight up here since that point. We're talking about, and even if we're being kind and saying, resistance was here in the 20, which is 2%. That's a 2%, 2.0, which is the way it looks on the TradeStation charts, to 2.9. That is a humongous move. You'd be taking profits on a stock at this point, potentially, right? Well, even though our indicators show that we're still in a buy zone right here, or bias on the long side. But breakout like crazy above the 2.2. And what is this all about? It's about unlimited amounts of money that are not going into treasuries. It's about the ultimate powerhouse of financial hedge funds, the Fed, not buying anymore. It's about the Fed saying, hey, inflation is out of control and we need to do something about it. And what they're going to do about it is put the brakes on the economy. It's about the big mouth Fed that just cannot shut up. I don't know about you. I am exhausted from the Fed. The speakers that come out, we have one on one side that comes out and talks about, hey, I think we're going to see 50 basis points. at the next meeting, and that's Bullard. Then he comes and says, well, that's baked in. Next week, hey, maybe even we're going to do 75 basis points. And then we have Bostic that comes out, and he says, yeah, I think we're getting a little bit too ahead of ourselves and maybe not so fast. And then we have Powell come out, and it goes, and Brainerd, it goes on and on and on. And what's interesting about this is that, like I said, they are doing what they can to break the markets. Well, and when I say the markets, I'm talking about the economy. They want it to slow down. Now, what they have is the Fed, that is, again, the big mouth Fed, against earnings. Earnings is a big issue. The theme of right now, this moment right now in this earnings season is not so much, okay, what did you do? It's what is going to happen. What do you see? What's going to happen with margins? What's going to happen with pricing? Is inflation bothering you? Are consumers still resilient, which they are to a degree? And then if all else fails, let's just do a quick and dirty blame game. We're going to blame Russia. We're going to blame inflation. We're going to blame the supply chains. We're going to blame China. We're going to blame the resurgence of COVID. Everything. And by the way, most of those things are very true. We can't ignore these items. They are facts. However, if we were to list, just go down a list, boom, 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 okay, all the different things that could be issues right now, and the Fed is saying, hey, we are going to continue on this path to slow down the economy, they're insane. This has got to be, I want you to listen to this for a second, then we'll get on to the charting and all, has got to be the worst Federal Reserve Board that I have seen in my, let me give me a moment, 40 years. Geez, 35 years. 35 years in this business. This has got to be the worst Fed ever. It started with Yellen, bled right through to Powell, and the whole team, they have gotten it wrong incredibly. Yes, okay, they did rescue the economy, but should they have? At the level that they did, knowing there was going to be such fiscal. We can go into a month-long tirade about this, but I got to tell you, what makes us think that right now they're right when they've been so wrong before? What makes them think they are so right? What do they think they're so right when they've been so wrong for so long? Remember, let's just pick up one thing and we'll end it here. The word transitory. The word transitory. Man, they got that wrong. But looking back, what do we have going on? This week, yields climbing. Every time yields move up, we're at 2.926 right now. 2.926, edging on that 3%, which will freak people out and is freaking people out right now. Again, the volatility we're seeing, and especially the NASDAQ, high tech, high PE, low earnings, potentially hard-pressed, no earnings, negative earnings companies, really disastrous. And from all sides, market are taking a beating. No asset class. I mean, yes, we could say, all right, well, yeah, Andrew, what about energy? Doing well. What about some of the Iranian plays? Doing well. I'll give you that. What about, looking at some of the very, very, very short-term bonds? Okay, they're holding up pretty well. But pretty much everything else is a disaster. There's no relief. So unless you were totally out, which is probably gnawing on you pretty well, trading, rapid fire trading, because yesterday you would have been long, short, short, long, short all over the place, and you could have made some really good money. I know some people that are making hundreds of points on their futures trades right now. There's no question about that. I mean, they tell me about it. I see it. There is some opportunity here, no question about it. But let's not also get away from the fact that any investment that is long in style, that is diversified in style, is not doing so well right now. Maybe not terrible, but it's just not holding up because there's nowhere to hide. Economics still strong in the U.S. A few caveats. I mean, we're seeing the housing market start to slow down a little bit. Maybe. Prices haven't. Take a look at your house on Zillow. It's unbelievable. But yet the 30-year mortgage, I was sitting and having dinner with a mortgage broker the other night, and we're talking, and they're like, oh, things are bad. I'm like, what's happening? Yeah, they said the refinancing has slowed to a trickle. Mortgages, people are finding it much more difficult right now with the higher prices of homes and the higher prices of the payment due to higher interest rates, finding it very, very difficult. So what we have is slowing refi in the mortgage market right here. I mean, it's obvious. Is that a surprise? No. Is anybody surprised? No. Manufacturing and other metrics really not showing anything. I mean, if you look at the PMIs around the world, some slowdown in certain areas. Clearly, China is slowing down due to the lockdowns in Shanghai, Guangzhou, and a few other areas around China, which are major areas. The ports are stocked with vessels trying to get in and out, but it's a big problem because the problem is that there is no significant amount of business going on in certain areas because of the lockdowns due to COVID. They're starting to lighten up a little bit. But we talk about this, are we in a peak parabolic rate right now? Are we in a scare factor? Again, continuing to move up ever so slightly as we talk, 2.928, which is freaking out these markets right here again. Are we going to get past yesterday, which is, yesterday was like 2.96, I think it was, something like that, 2.95. Are we going to start moving above that? I mean, the chart would indicate that there's no stopping, right? I mean, this is a parabolic move if you've ever seen one. There's no question about that. But the fact of the matter is there is a point that higher prices will knock out higher prices, that things will slow down. Is it now? I don't know. Because the Fed just won't shut their mouth like we talked about right at the beginning, right? The big mouth Fed, right? We talk about that, the big mouth Fed. They just can't not get the free lunches at the Harvard Business School or go to Yale for their little lunch and talk about whatever. And whatever their byline is, they will talk it to death for the free lunch. I don't think they pay. Anyway, let's talk about a few other things that are going on here. Let's look at this. I find this really interesting. So there was a line in the sand we had on the SPY 417, not there yet, 438. It's starting to roll over again. Thought that everything was all free and clear. Look at that. Pointed out some time ago that there is a, right about here, right? We talked about how there was that level of exhaustion to the upside after that really nice move that happened right here, right? This great move, couple of exhaustion points, and then it did, in fact, roll over. I thought that was interesting that we had a 4 right there. It was actually a 6 intraday. It was all the way up by here intraday. And that was interesting. I shared that, as a matter of fact, I shared that on Twitter that day, and I thought that, hey, that's saying something. But I'll also share with you the thought that right now, we have a support line right across here. See that? That we could probably pull up on the TriggerCharts altimeter and the radar that will show that pretty effectively. But the thing that concerns me is right over here. Market in equilibrium, right? Right here. We're not seeing anything more than a 0, meaning if we read this, it's very simple. The overall market as measured by the KRI algorithm is currently not overheated or oversold. The market is currently in equilibrium, meaning the current shorter-term trend should continue until the KRI value indicates otherwise. Now, folks, you're all listening. You're all there. Tell me something in the chat. What is the current trend? So we're looking at the short-term trend, the current shorter-term trend. So then this will answer our question, right? What is the shorter-term trend? Is it up? Is it down? Is it consolidating? I think that's a big question. Shorter-term trend. You start and look at a chart. Where do you start on a chart? Now, don't be shy. I want you to type here. I'm going to start here, right here. Everybody participate. You have a keyboard in front of you, your mouse, click over to the texting area, the chat area. Are we in an uptrend or a downtrend? I don't think anybody can see. If you're wrong, don't worry about it. All right, we're getting, yep. Okay, so where are we? So Yep. All right, the majority of people are saying downtrend. I would tend to agree. The shorter term. I'm not talking about long term. I'm talking about shorter term. Long term, we could look at something like this. Where are we here? Look at these lines here. I don't even know where to connect this. Kind of here. Maybe it's a bit of a megaphone. But short term, this is the trend right here. This is our trend right here. The short term trend. Right? From the April 28th, almost a month now. Here was a short-term trend that was an uptrend. That was a short-term trend. So now, if the short-term trend should continue until the KRI indicates a period of overheating or oversold, we have some time till it goes up here or down here. And as we are seeing this chop and this, which feels pretty dramatic, right? And we got this layer over here, layer over there of approximate support. The question then becomes, where do we go from here? We're still within that support range, I would say, till about 435, but we're getting darn close at 436 right now. Too close for comfort on a weekend, to be honest with you. The other thing that's interesting to note here is that we did see the Spearmint indicator start to move higher off of a low. That's good divergence right now, but you're still below zero. We always look at the roll down, but below zero, which would have been right here, right about here, right there, right there, as a time that things aren't good from a momentum standpoint. McClellan, interesting, had a really nice pattern above, which was a complex pattern to a degree above the zero line. And way up. I mean, way up. That could have been an initiation of the next leg, but fell down, got pretty low, not terribly low, better than it was. So you got a divergence of the lows, right? You got higher lows. Look at all the different higher lows that we're looking at. We got this low and this low and this low and this low. These are higher lows. That's a good thing. That pattern is decent, meaning that maybe the advanced decline line is not as abysmal as we may think it is, except for certain areas of the market like technology. You know, you look at something like an ARKK, which is a high-priced, high-tech. Oh, that is just awful. Down another 17 cents today, right? You know, we're talking about right about bang on all-time, well, not all-time lows, but lows since 2020. We got to really look at this from this standpoint. In a hole, just bad. Weekly is a short. Oversold to a degree on a weekly with the aileron. Not a pretty picture. Okay, first of all, we're going to go through some stocks. Second of all, I want you to put in your symbols so we can take a look at those and figure out maybe there's something to look at there. I also want to start with Bitcoin today. This is the cash contract of Bitcoin. I want you to see something right here. These are lines that we drew in some time ago. I wish, you know, it would be kind of cool if we could see what date we drew these in. I know when I leave them here, I guess we put a note on here, I guess. Anyway, this 45.5 and this 38.82, and we're starting to see this dip down a little bit again right here. And as we're seeing gold dip down and markets dip down. Interestingly, if you overlay some things on this chart, when you look at, for example, the volatility of the NASDAQ, it's playing right into the volatility of Bitcoin. It was supposed to be more of a, I would say, hedge or alternative, a contrarian, a backup type of instrument. That doesn't seem to be happening. Where are we with this right now? Well, right now we're in a short bias on the daily. We do see some momentum building here towards the zero line. So that is a divergent signal, not a high quality that I would say, but still the general pattern is down. We have this 38,828 dipped below it, picked right back up a few days ago. Remember, this trades 24/7 on Bitcoin. Looking at this a little bit longer, I like to, if I can't really see, let me just show you something. If I can't really see a discernible pattern, this gigantic level of, it kind of got there and didn't break out. It didn't really break down. It did break down a little bit, then it picked right back up, and it's in a consolidation. Let's go out a little further and see what we have here. And once again, these are the same lines that you have on there. This is a weekly. We're still in the same exact range on a weekly. Can't move above or below. Got an important level. We can even refine this a little bit on, this is a weekly, we're going to refine this. I would say right about there. 37,328, this is weekly. Now, if we go back to our daily with those refined levels, you see there's some lines that we can connect. Always looking from right to left. We talked about this before, right? Always looking right to left, right to left, right? Let's see if I can make a better one of these. There we go. Right to left. This way, this way, this way, this way, this way. Remind yourself of that all the time. Even on the top here, we have the radar screen, the multi-time period radar screen. We always look from right to left to see, okay, we're long on the weekly by 6. Okay, long on the daily by 6. This is the rate. And then we are nothing in here. Interesting. Could it change? Short alert on Netflix on a weekly. Short. It's been 1460 minutes. It's been 4 days short on the 240, 2 days short on that. We'll go to the chart in a second and look at that as markets are starting to peel a little bit lower before they open. So that's Bitcoin. Let's take a look at Twitter. Twitter obviously is in an interesting situation right now. Could you have figured this out and called this? I mean, you know, listen, charting and technical analysis, even the best indicators in the world, it's almost impossible. It is impossible to figure out what's in the mind of a suitor that comes along to try to buy a company. And if you happen to hit it right, it's lucky. Let's be honest. Twitter right now is in an upward bias. It really can't get above this level of 48. 54.20, I believe, is a level that was expected to be the buyout. Right now, a discount because they're not thinking about whether or not this could be done or not. This stock is a no touch, in my opinion, unless you are thinking one of two things. One, hey, Elon Musk is going to be successful somehow in doing a tender offer or doing a deal to get this thing done. Two, Elon Musk is not going to be successful in a tender offer or getting anything done. There's a binary outcome of this. Now, there's one little possible third issue that somebody else comes along and says, you know, $54.20 is wholly inadequate. We're going to offer you $58. That could be. That is the only possibility. Now, Twitter will be in play for a long period of time moving forward, so the price may hold up for a bit. But I just think that some of this is pie in the sky, and we could definitely see it back down to the 39s where it rested beforehand, which is still a little bit higher than it's been. Netflix is down 22 cents today, got obliterated. We saw that these levels, we wrote in here some time ago, they were breached, they were done. We saw that really over here. Once you got into that short, this is 4.6. This is plenty of time for you to make a decision that maybe Netflix isn't doing so well. I mean, I'm not talking about here at 5.90. I'm not talking about here at when it broke down here at 5.20. I'm not talking about even when it broke down here at 3.85. I'm talking about, there was plenty of time here at 3.60, 3.50 to get out. Now trading at 2.18. Where do you go from here? I mean, if you love Netflix, if you think there's an opportunity to turn it around a little bit, if it's oversold, I mean, look what happened here. This gap, never anything happened except the consolidation that broke down. That was the key, looking at this consolidation level where we connected multiple lines right here, right? So we take this horizontal line and we connect it to an important and a key resistance point right there. And we take this line right here and we connect it to some key support levels. And there you have a very simple level. Now, it could be a couple of dollars off either way, but basically that's the illustration that you want to focus in on. And when you look at that in the aileron, what happens is that you're looking at this in a significant manner to, when it starts to roll or move higher, that could see it an alt there. What we're seeing here, gold is in a bit of a trading range right now. This is daily on it. Again, I want to look at where we are. Looks like it's tried to break out of its weekly. Got right back down to support level right there at the top of that box that we drew in, right? If we extend this line from the top of the box, let's just do that right here. 180.20, right? Close to where we are right now. Support where it was yesterday, turned around dramatically, started moving higher yesterday, and then finished towards the lower part of it. But still, a significant change in the dynamic here if it does, in fact, get above this line here, this 180, the resistance line is, well, I'll call it a little bit higher, 185, we'll call it. That's a level you really want to watch. Silver, very similar situation. Weekly, again, 26.01 was the buy point way back when. That was here, and then it consolidated. So let's take that off. Let's move that over here, and let's say that right now, let's move this line, kind of notes you could put on a chart for yourself. I would say there, 24, we'll put this on here, 24, I'm going to just take, I like taking up a few cents. 15 is the buy point. 24.15. If you get above that, what happens is you got some air above you right here, all the way up to about 27 and change on silver. So something interesting to look at. BAC, very resilient in the near term. Obviously been rolling lower for some time, holding on to some of this. Weekly, we're seeing that is rolling down. Let's go back to our daily, which most of us will look at as a trading position play or time frame that we look at. And, you're looking at this and it kind of picked up because rates picked up, then it came down yesterday. Just nothing's really doing well. DWAC, this is the Trump Truth Media thing, just abysmal. Food stocks, company like United Natural Foods reached its plateau yesterday with some resistance, holding up really nicely. Next level is probably about 48 and change on this. If you look at try to find those key levels on a daily. Now, you could use these on any chart. You could use it on a 30-minute. I don't like to go under 30-minute. We could do it on 30-minute. 15-minute I love, actually, for coins, for crypto, and some commodities. 15 minutes are really cool for commodities. Some currencies, but crypto, definitely, I like it. Like it a lot. Look at these charts. Look at that. This is a steel company. Hello, Betty. This is a Nucor. This is in the, let's just call it the materials area. Same thing here. Steel Dynamics. Hello. FCX we're seeing today come out with earnings, not doing so well. Yesterday did plow down pretty hard, moving down again. Snaps out with their earnings trading at 28.83, missed by a little bit last night, moved all the way up to about 31 after the close right now, questioning whether or not this is a good deal and probably riding along with the NASDAQ. Tesla up ever so slightly, up $1 today after getting up pretty substantially yesterday and then falling right back down, failing on its breakout. Now, we have a few things. We have a lot of things here. Wow. Okay, let's look. Is it what we want? The one Alphabet, Google? Just looking at miserable. Everything's looking miserable. Let's be honest. Miserable, miserable, miserable. We're at support, I would say, for Google. We're seeing this aileron show a little bit of a reversionary move, but nothing that would be like, oh, yes, you have to get there. This breaks, you're in trouble. This breaks, I don't even know where you go. Let's see. If this breaks, next stop is probably 23.20. So another $200 on Google. I don't see this as a pretty chart at all. PFIX. Yeah, so this is an interest rate hedge. Interesting. This is pretty much looking at where we are from March on the. I don't really know what this does. It doesn't really matter. But we saw this consolidation for some time. If this works, I mean, we're talking about 47.59. It looks like it works pretty good. I like that. I guess they're going with interest rates on that, on the upside. Pretty cool. I have to check that out. Anybody ever checked it out otherwise? Let's see what it looks like. Let's think about this. I have this weird feeling that this may not work long term, though. Wow. Yep. Wonder what happens as interest rates go down. Wonder if they hedge that as well. I'll have to take a look at that. Interesting. LAM. This, no. Well, LCRX. LAM is, I don't know. LRCX. LAM Research. Is that what you're looking for? Tex? It goes Tex. Yeah, part and parcel to the fact that the party is just seemingly over. I mean, look at this. Now, let's forget the fact it was 700. Just put that out of our minds. Let's look somewhere over here. It was in the 600 range, right? Now trading down about 20% at 468, excuse me. Again, these charts just look like they can all come down. All these head and shoulders, these weird, strange looks of these charts. It's just not, I don't know. Give me some good charts to look at here. Oh, that's a good one. There you go. Right there. What is this one? U.S. Equity Income Enhanced Vol. Oh, Enhanced Vol. Wow, look at that. That looks pretty interesting. This is an all-time high. Victory shares U.S. Equity Income Enhanced Vol. I like it. This is pretty cool. Not sure what they do, but look at that. Let's go back and see how long this thing runs for. This is just from July, so they may not have. They've been around for a while. Didn't do anything forever, and then somehow got it right here. Look at that. 47.73 is from. Wow, where was this? So back in 2020, my birthday right there, 320. There was the low, pretty much, down to 39, right there, and then just took off. I guess they got their deal right. Something happened. They got things going right there. All right, what else we got? I got a couple others. No, we did that one. We did that one. Okay, somebody was asking about. No, that's not what I want. This is what I want. What's moving this morning? SVB Financial up 14%. Upwork up. Carvana, terrible numbers yesterday. Somehow they wanted to move. Digital World, after yesterday's bloodbath, is down 17%. Gap down 20% today. Some things that may be looking at to work with. Globus Medical, a few of the trading positions that we've seen work really nicely. Kirkland's always somewhere moving around. That's about it for today. Hey, thanks so much for joining me. We'll be back again next week. If you have any questions, just go over to TriggerCharts.com. Send your questions that you may have to support@TriggerCharts.com. Thanks so much for joining me. Have a profitable day.